Hi, this is Christian Takushi, and it is Saturday evening, I think around 6 7 p.m. in Switzerland. And you might be wondering, what is Christian Takushi doing at this time? Should be with his family or resting. Um, in fact, I've been on my feet 19 hours of the last 24. I should be resting actually, but I'm not. And there is an important reason for this. I was reading the last few days financial media, and I saw so much disinformation out there. So much disinformation. I felt I really needed to do something and share this with you. I don't know why people are doing so much disinformation, whether it is intentional or unintentional. Everybody will have to answer to his own conscience, answer to God one day. I'm doing what I think I have to do as an independent macroeconomist that is doing his own research and analysis. What you are reading out there about inflation is misleading. Most likely, I don't know exactly, but most of what I see there out there the last 10 days is misinformation or misleading. What is happening at the moment around the world is not what you're being told. Everywhere I turn, I see some government official or some economic expert or banker saying, oh, the problem with inflation, this inflation is just very temporary. And don't worry, there's no problem because in Europe, Russia is to be blamed. So they're blaming now Russia in Europe for higher energy prices. They're blaming in China the coal-fired power producers for it. They're blaming the South American copper producers. In the US, they're blaming the meat packers. Here in Europe, they're also blaming the wind. So all these individuals, all these companies, all these industries seem to be conjuring together to create inflation in the world. It's not really very credible. I'll tell you what I see. What I see is that we are now seeing the results, the ugly face of 11 years of extreme monetary policy. What we are seeing now is the beginning, is the ugly face of 11 years of monetary policy of the G7, especially the Western industrialized nations. What have they done? They have been printing money at a gigantic pace, and they have been putting interest rates at zero. And as I have been warning for the last 11 years, printing money excessively will create inflation sooner or later, and B, putting interest rates at zero or even below zero will create deflation and will destroy incentives to invest in productive capacities or to keep maintenance in order. So companies will not invest in what they should be investing, in research, new capacities, and they will also not invest enough in maintenance. They will not even invest enough in educating their people because it's not profitable. I've been warning about this, that we're going to get both inflation and deflation, different phenomena, different places, but they will happen simultaneously sooner or later. And once they start overlapping, start converging, and I think the time has come now, once that starts happening, what we see are stagflation phenomena of stagflation, little growth, substandard growth, but also inflationary shocks. This is what is happening, and this has nothing to do with Russia or China or South America or the wind or the meat packers or people's being greedy. No. This is the result of monetary policy. And I believe that inflation is not temporary. Inflation is going to be quite a permanent phenomenon for the years to come. And people need to prepare for that. Yes, this is very important that we prepare for that. This is actually very interesting. For 11 years, central banks have been printing a huge amount of money, and they've been telling people that there is no inflation. Oh, don't worry. CPI is 0 or 1%, so we can keep printing money because there is no inflation. And investors, banks, even pension funds have been telling people, yes, trust the government. There is a fantastic stock market, a bull market, and thank God there is no inflation. Ladies and gentlemen, this was not the truth. Over the past 11 years, you've been hearing there is no inflation. Inflation is just 0, 1%, maybe 1.5%. The truth was, all this time there was a huge inflation. There was a lot of inflation, but it was taking place in the stock market, in the bond market. By the way, the bond market is huge because everybody is indebted. Not everybody, but most people are indebted. Governments, people, entrepreneurs, companies, housewives, students, everybody seems to be indebted. And where else? There was also huge inflation taking place in the real estate market. So investors, retirees, pension funds, insurance companies, banks, they've been quiet, very quiet about the big amount of inflation that this money printing was creating. Why were they quiet about it? Because they were benefiting. Their portfolios were going up in value. They were becoming rich. I don't know if we should say rich because it's just debased paper money, right? I don't know why people are so proud of making money or making nice performance with debased money. It's on the one hand debased money, on the other hand is artificial orchestrated rally orchestrated by the government, because governments have been printing money and using part of that money to buy stocks, to buy bonds, and to force companies to buy real estate. So the government has been creating this rally in the financial sector. The truth is, pretty much from the beginning of this excessive money printing, we've been having a lot of inflation. But you have not been told that. Actually, 99% of everything I've read in the last 11 years was this, oh, this is so good, amazing, we're printing so much money and thank God there is no inflation so we can keep printing money. How interesting. Normally, excessive money printing leads to inflation, but there is no inflation. How can it be? Very interesting, right? Very interesting. Inflation has been staring at us and has been bountiful in the financial sector. And now, finally, that inflation is beginning to spill over from the financial sector into the real sector. Just at the time that 11 years of very low interest rate policies or zero rate policies has actually debilitated the real economy so much that the first major disruption starts causing the breaking down of the pipes, everything is breaking down. Now that, for 1 year there was little demand, now demand is coming back. So companies had to go from 65% production capacity to, let's say, 85% capacity. Already at 80%, things were beginning to break down. At 89, 90% capacity, they really broke down. You know why? Companies have not been doing proper maintenance for the last 11 years. They have not been even training the people to do the maintenance. You know why? Because it wasn't profitable. For the last 11 years, so-called money smart managers have not been taking care of the maintenance of the companies, the fabriken, the facilities. They've not been investing in productive facilities. They've not been investing in research and development. They've been investing in the stock market. How did they make money? They bought back their own shares. It's legal. They bought back their own shares, or they borrow money. Yeah, they borrow money, cheap money to buy back their own shares, or they borrow money to buy their competitors. That's how they created profits. That's how they made money. Really not by engaging in productive activities. Companies have not been really generating value, economic value over the last 10, 11 years. They've been making money in different ways. And this is showing now. Do we have to blame the companies? I would say they just did the greedy thing. They did what was more profitable. But I think they should have been wiser than that. But ultimately, companies will tell you, well, you know what? We're here just to make money. And if the central bank creates an environment where it's not profitable to invest, but it's rather more profitable to speculate, we do it. And now we're seeing the result of this. We're seeing the result. And the result is stagflation. The result is an economy that can easily tip into hyperinflation or deflation. Actually, we're seeing both. Both. We see a lot of inflation and deflation in the current world economy. Thank you very much for paying attention to me on a Saturday evening. I hope that this is helpful to some of you. If you want to know more about our independent research, please check geopoliticalresearch.com, and there you can access some of our research that is publicly available. Sorry, not all the research is publicly available. If you want to have direct access to all our research immediately, please subscribe to our newsletter there. I wish you all the best, and let's go all of us to spend time with our families. Thank you.